Most silver holders are watching the price right now. I think they are watching the wrong thing. Because the real shift in silver today is not just the Fed headline, and it is not just the Iran deal headline. It is what those two stories just changed underneath the market. And if you are holding silver, trading silver, or watching comex closely, the next move may depend on whether you can spot that shift before the crowd does. This is Bullion, and in this video, I'm going to show you exactly what changed, what still has not changed, and what silver holders need to watch next. Now, let me say this cleanly from the jump. The media is covering the headline. Silver holders need to watch the mechanism. Those are not the same thing. A lot of people saw the Fed headlines, saw the geopolitical headlines, saw silver move, and instantly started telling themselves a simple story. Either silver is about to rip or silver is about to roll over. But that simple story is usually where retail gets chopped up. The real edge is understanding what changed, what did not change, and what matters next. So here's the question for this video. Did the latest Fed shock and the fresh Iran deal headlines actually change the long-term silver thesis? Or did they just change the short-term setup that silver traders, bullion watchers, and comex curious viewers need to track over the next few sessions? That is the real question. And by the end of this video, I want you to know exactly what I'm watching, exactly what would strengthen the silver case, and exactly what would weaken it. And that matters, because silver is not just one thing. It is money metal, industrial metal, sentiment trade, inflation hedge, and risk asset all at the same time. That is why silver can look messy if you only watch one headline at a time. When the Fed sounds tougher, silver can sell off because the dollar firms up and traders de-risk. But if the reason behind that Fed tone is tied to inflation pressure that may not last, or growth concerns that could flip the market later, then the first move is not always the final move. Now, layer in the Iran deal headlines. This is where people get lazy. They hear deal headlines and instantly say, okay, lower geopolitical risk, lower safe haven pressure, maybe metals cool off. That is one possible read. But again, that is only the headline read. The deeper read is this. If the market believes energy pressure could ease, shipping risk could ease, and inflation stress tied to that region could cool, then the same macro setup that looked hawkish for the Fed can start getting reinterpreted. In plain English, one headline can push the market toward fear of tighter policy, while another headline can make traders ask whether that tighter policy pressure may fade faster than expected. That is why the silver setup just changed. Not because one headline magically decided the next 6 months. It changed because the market now has two competing narratives fighting for control at the same time. On one side, you have Fed shock, stronger dollar pressure, and paper market selling reflex. On the other side, you have a possible shift in the inflation path, a possible easing in energy stress, and the chance that silver gets repriced once traders stop reacting and start thinking. If you are a silver investor, this is where you need to stay calm. If you are a silver trader, this is where you need to stay sharp. And if you are a bullion watcher, this is where you stop obsessing over one candle and start watching the structure. Here's the sequence that matters. First, the market hears tougher Fed language. Second, paper silver reacts fast because that is what paper silver does. Third, geopolitical headlines show up that may change how the inflation story gets priced. Fourth, silver traders start asking whether the first move was too emotional. Fifth, physical holders watch to see whether weakness gets bought or whether the market starts losing key levels. That sequence matters more than the panic on social media. And let me add one more layer, because this is where a lot of channels either lose people or sound fake. The strongest silver content does not just scream danger. It shows viewers how to think through danger. That is why this setup matters so much for this audience. Silver investors want clarity without hype. Silver traders want movement with context. Bullion watchers want to know whether the physical market is confirming the paper move. Comex curious viewers want to know whether the structure underneath the screen is tightening or loosening. If your video can answer those 4 questions in simple language, people stay. If it just throws out drama with no framework, people click off. So when you hear Fed shock, do not just hear fear. Ask what kind of shock it is. Is it a policy shock that changes the path for months? Or is it a reaction shock that creates 2 or 3 messy sessions before the market settles down? When you hear Iran deal headlines, do not just hear peace or panic. Ask what part of the macro story could change if those headlines gain traction, and what part stays unresolved even if traders get excited for a day or two. Silver usually gets most interesting when the market has not decided which story matters more. That is where traders get chop, but it is also where prepared viewers can find real edge. And if you are new here, that is exactly how Bullion is going to approach this market. Not by pretending every candle is destiny, but by showing you which signals deserve respect and which ones are just noise dressed up like breaking news. That means reacting slower, watching deeper, and remembering that silver punishes anyone who confuses noise, headlines, and structure. So what should holders actually watch next? I am watching 5 things. Number 1, I am watching the dollar. Not because the dollar tells the whole silver story, but because in the short run, it can set the tone. If the dollar stays strong after the Fed shock, silver may struggle to get clean upside follow-through. If the dollar fades after the first reaction, that tells you the market may be backing away from the most aggressive hawkish interpretation. Number 2, I am watching how silver behaves around obvious support and resistance. Not theoretical levels, I mean the levels everybody is staring at. If silver gets hit on hawkish talk and then keeps finding buyers, that tells you dip buyers are still active. If it bounces weak and volume dries up, that tells you traders are not convinced yet. Price action around key levels tells you whether fear is getting absorbed or whether weakness is spreading. Number 3, I'm watching the gold-silver relationship. This is underrated. When the macro picture gets messy, gold often tells you whether fear is still in the room, while silver tells you how much torque the market is willing to take. If gold stays firm and silver starts catching up, that can be constructive. If gold firms while silver lags badly, that tells you traders still see silver as vulnerable to growth and industrial uncertainty. Number 4, I'm watching physical demand behavior. This channel is not just for chart watchers. It is for silver investors and bullion watchers too. If spot gets shaky but physical interest stays solid, premium stays sticky and stackers keep buying, that tells you the floor may be stronger than the panic suggests. If paper drops and physical demand also goes quiet, that is a different conversation. Number 5, I am watching comex structure. And this is where a lot of people talk big without saying anything useful. So let me keep it simple. I want to know whether open interest, delivery expectations, and positioning are creating pressure that could amplify the next move. Because if paper selling hits a market that is already structurally tight, the downside can get absorbed faster than people expect. But if positioning is sloppy and conviction is weak, even a small macro shock can turn into a bigger flush. If you're still with me, hit the like button once because this is the part most mainstream coverage skips. They tell you what happened. They do not tell you what to watch next. And for silver holders, what comes next matters more than the first emotional headline reaction. Now let us talk mindset, because this is where people usually fumble the bag. A lot of silver holders think every hawkish Fed headline means the silver thesis is dead. A lot of silver bulls think every geopolitical headline means silver has to moon. Both reactions are lazy. Silver does not owe anybody a straight line. It moves in layers. That is why disciplined holders survive and emotional traders get cooked. The better question is not, is silver bullish or bearish today? The better question is, did this event improve or weaken the setup across the next few sessions, the next few weeks, and the next few months? Those are different time frames, and if you mix them up, you make bad decisions for good reasons. For long-term silver investors, the core thesis is usually bigger than one Fed speaker or one weekend headline. You care about debt, currency trust, monetary policy credibility, physical demand, supply pressure, and the long arc of confidence in paper systems. That thesis does not get erased in one news cycle, but your entry quality, your sizing, and your patience still matter. For shorter-term silver traders, the job is different. You're not married to the thesis, you are married to the setup. That means you care about reaction, confirmation, momentum, and whether price is respecting the structure after the headlines settle. If silver cannot reclaim strength after the first shock fades, that tells you something. If it snaps back fast and starts holding bids, that tells you something too. For bullion watchers, this is the sweet spot, because you get to sit between the noise and the signal. You can watch whether dealer chatter gets louder, whether physical buying interest stays alive, whether premiums react, and whether the paper move is actually changing real-world behavior. Sometimes the chart screams panic while the physical side shrugs. Sometimes the chart looks calm while the real stress is building underneath. That is why bullion watchers have an edge when they pay attention. And here's something else the best performing channels understand. Viewers stay longer when the script keeps reopening the loop. So let me reopen it now. The big issue is not whether the Fed sounded tough. The big issue is whether the market has already overreacted to that toughness in a way that creates opportunity for silver, or whether the Iran deal headlines are too early and too soft to matter. That tension is the setup. In other words, this is not a one-answer market. It is a prove-it market. Silver now has to prove whether buyers will step in after the macro shock. The dollar has to prove whether the hawkish read has real legs. Geopolitical headlines have to prove whether they are changing inflation expectations or just creating a temporary vibe. And comics-focused viewers need to prove whether structure supports the next move or fights it. That is why I would not frame this as a blind buy everything moment, and I would not frame it as a panic sell everything moment either. This is a monitor the follow-through moment. Oh, watch the dollar, watch support, watch the gold-silver relationship, watch physical demand behavior, watch comic structure. If multiple signals start leaning the same way, the market is giving you information. If they stay mixed, patience is the edge. So here is my practical read. If silver absorbs the hawkish shock, stabilizes, and starts trading stronger while the dollar loses momentum, that is constructive. If geopolitical headlines cool inflation fear without killing broader risk appetite, that can also support the setup. But if the dollar stays bid, silver fails to hold key levels, and physical demand does not step up, then holders need to respect that the setup weakened in the short run, even if the long-term thesis still exists. That is the difference between being a believer and being a grown-up operator. Belief gives you conviction, structure gives you timing, and that is what Bullion I is about. Not fake hype, not robotic doom, not empty silver moon talk. Real framework, real levels, real behavior, real watching. So before I close, do two things. First, drop the live silver price in the comments and tell me whether you are holding, trading, or stacking. Second, tell me what you're watching most right now, the Fed, the Iran headlines, physical demand, or comex. I read those comments and they help shape the next video. If this breakdown gave you the real story behind the headline, hit like, subscribe, and turn on notifications. This is Bullion I. Stay sharp, stay patient, and watch what the market proves next.